You are still working. You have employer coverage. You feel protected. You feel like Medicare can wait. 3 of those 4 statements may be true. The 4th is costing you money. Right now, every month you do not know what I am about to tell you. 4 traps, permanent penalties. HR never explained them. Nobody did. By the end of this video, you will know all 4 and exactly what to do. You might be thinking this only applies to people who made a mistake. And since you are still employed and covered, none of this touches you. Or you might think HR explained your Medicare options when you turned 65, so you are covered. Both of those assumptions have a permanent price tag. 2 of these 4 traps activate the moment employment ends. 1 activates before, while your HSA contributions are still going in, and HR is not trained in Medicare enrollment law. The penalty is federal. The misunderstanding is local. I am not a lawyer, a licensed insurance agent, or a financial advisor. This is educational, based on 2026 Medicare law and IRS guidance. Verify your situation with a licensed professional or ship at shiphelp.org before acting. My name is Richard Voss. I spent 18 years advising the agencies that write these rules. The people I watched get hurt most were the ones who thought they had more time. How does a senior work past 65, maintain employer coverage, do everything that feels responsible, and still end up with a permanent Medicare penalty? Medicare's enrollment rules exist in federal statute, not HR manuals. 3 conditions must align: employer size, coverage type, enrollment timing. 1 condition wrong, the penalty is permanent. Nobody in that chain, not HR, not the benefits coordinator, not the insurance broker, carries legal responsibility for making sure you knew. Only one party does. I reviewed coordination of benefits disputes for years. Every time, the senior had been verbally told their coverage was adequate. The federal government's position was that verbal assurances do not override enrollment deadlines. These are not obscure rules. They are the rules. The only way they do not cost you money is if you know them before the deadline passes. So here they are. Let me show you what these 4 traps look like for one specific person. Robert is 67, plant operations manager, 18-employee company, retired March 2026. He took COBRA because that is what HR told him made sense. He contributed to his HSA through early 2026. He believed he had done everything right. Robert did nothing wrong except trust that the people around him knew the rules. They did not. The first trap is the one I have watched cost more working seniors more money than any other single Medicare mistake. When your employment ends, Medicare gives you an 8-month special enrollment period to sign up for Part B without penalty. That window opens the day your active employer coverage ends, not the day COBRA expires, the day active coverage ends. COBRA does not count. Retiree coverage does not count. Individual marketplace coverage does not count. Only active employer group health coverage from a company with 20 or more employees protects your enrollment window. I reviewed coordination of benefits disputes for years. COBRA was the single most documented source of avoidable permanent penalties in the working past 65 category. I want to be specific about what is happening here. HR departments across this country are telling retiring employees that COBRA will protect their Medicare eligibility window. It will not. The federal government does not have an I didn't know exception. A senior who delays Part B enrollment by 18 months because they believed COBRA would protect their window pays a permanent 10% surcharge, $20.29 more per month for life, approximately $4,870 in unnecessary extra premiums over 20 years. The day your employment ends, not COBRA start, not COBRA expiry, begin your Part B application at ssa.gov or call 1-800-MEDICARE. The 8-month window starts that day. Before I continue, did you know COBRA does not count as creditable coverage for Medicare enrollment? Yes or no in the comments. That answer explains exactly why this penalty keeps happening. The second trap hits seniors who work for small businesses, and most of them have never been warned it exists. If your employer has 20 or more employees, federal law keeps your group plan primary over Medicare while you remain actively employed. You can safely delay Part B enrollment without penalty. But if your employer has fewer than 20 employees, that protection does not exist. Medicare becomes the primary payer at 65, regardless of whether you have enrolled. The employer plan can legally deny the claims Medicare was supposed to pay first. The senior is left with no effective coverage without realizing it. The 20-employee threshold lives in the Medicare Secondary Payer Statute, not a guideline, the law. Most seniors at small businesses have never been told which side of that line their employer sits on. A senior at an 18-employee company paying full employer plan premiums for a plan that legally cannot pay their claims, while Medicare sits available and unenrolled. Ask HR in writing today. Does our group health plan qualify as primary coverage over Medicare for employees over 65? If the answer is no or uncertain, call 1-800-MEDICARE immediately and begin Part B enrollment. Those first two traps are rules most seniors never hear. What comes next is different. The trap that runs while you are doing everything right. The IRS delivers this one. A retired pharmacist in Minnesota, 66 years old. She enrolled in Medicare Part A in October 2026 after retiring in April. Part A backdated to April 2026. She had contributed $2,200 to her HSA between January and June. All $2,200 became excess contributions. She received an IRS notice in February 2027. Her accountant had never mentioned the retroactive rule. Her HR department had never mentioned it either. Here is the rule she was never told. You cannot contribute to a health savings account in any month you are enrolled in any part of Medicare, including premium-free Part A. When you apply for Medicare Part A after 65, coverage backdates up to 6 months. Any HSA contributions made during that backdated period become excess contributions, subject to a 6% IRS excise tax every year they remain in the account, plus income tax on any earnings. This appeared in compliance discussions for years as an edge case. It is not an edge case. It affects every senior still contributing to an HSA when they apply for Medicare after 65. A senior who contributed the 2026 HSA maximum of $4,400 in the months before applying for Medicare, not realizing Part A would backdate 6 months, faces a $264 IRS excise tax annually until corrected, plus income tax on any earnings. Stop all HSA contributions at least 6 months before applying for any part of Medicare. If you applied for Medicare recently and contributed to your HSA in the prior 6 months, contact a tax professional immediately and reference IRS Publication 969. The fourth trap does not require a large mistake. It requires a small one, missed by weeks, and then it runs. The general enrollment period runs January through March. Coverage starts the month after you enroll, but every month you spent waiting to get there, that penalty is already permanent. When a senior misses both their initial enrollment period and their special enrollment period, they cannot enroll whenever they are ready. They must wait for the general enrollment period, January 1st through March 31st. Every month between the missed SEP and the GEP enrollment date adds permanently to the penalty calculation. Miss your SEP in September, cannot enroll until January. Those 4 months are already accumulating before a single claim is paid. and the 10% surcharge follows you for the rest of your life. The GEP delay was designed to prevent adverse selection, people enrolling only when they get sick. The unintended consequence: the senior who missed a deadline by weeks accumulates months of permanent penalty just waiting for the window to open. A senior who misses their SEP by 4 months and waits for the next general enrollment period begins paying a permanent 10% surcharge, $20.29 extra per month, from a mistake one phone call before employment ended could have prevented. If you believe you missed your SEP or initial enrollment period, call 1-800-MEDICARE today and request a formal eligibility review. If the general enrollment period is your only remaining option, apply January 1st, the first day it opens, to minimize penalty accumulation. Let me put all 4 of these together. Robert took COBRA when his employment ended. His SEP closed while COBRA was still running. His 18-employee company meant Medicare was already primary at 65 whether he enrolled or not. His HSA contributions in early 2026 may be retroactively penalized by the IRS, and the months between his missed SEP and his January 2027 enrollment date are already calculating into a permanent surcharge. His first year of retirement generated more in penalties and tax exposure than any single year of Medicare premiums was supposed to cost. Here is what connects all 4. Not one of these traps requires you to do anything wrong. You just have to not know the rule in time. The employer did not tell you. HR did not tell you. Nobody had a legal obligation to tell you. The federal government's enrollment deadline does not care. It runs. When it closes permanently. The senior who knows these 4 rules before their last day of work leaves employment with 0 penalties and 0 gaps. The senior who finds out after pays the difference every month for the rest of their life. Every month. 4 traps, 4 actions. Do all 4 before your last day of work. 1. Confirm your employer has 20 or more employees and that your group plan qualifies as primary over Medicare. Ask HR in writing. 2. Mark your SEP start date the moment employment or coverage ends. Set a calendar alert for month 6. 3. Stop all HSA contributions at least 6 months before applying for any part of Medicare. Do not wait until application day. 4. If you have already missed a deadline, call 1-800-MEDICARE today, not next week, today. Working past 65 while feeling protected is not the same as being protected. Now you know the difference. This channel translates Medicare's rules before the deadline runs. Subscribe. Which of these 4 traps were you unaware of before today? Drop the number in the comments, 1 through 4. If someone you know is approaching 65 and still working, send this before their last day. And if you want to understand the full Medicare enrollment timeline, every deadline, that video is right here.